One thing I often tell new traders is that there are a lot of subtleties in a strategy, a lot of small things, quirky things that you got to learn to be able to trade a strategy really well. And over the years, you're going to become the master at your own strategy. But if you don't learn these small things that make a big difference sometimes, your results will suffer. In today's video, I'll share with you a training that Michael Toma, a good trader and fund manager, did for our program a few months back. In this program, we have people get profitable, scale up their trading to 6-7 figures in a few months. And that call discussed specifically how to look at the quirky nuances and the small details of a strategy to understand it better and get better results with it. You'll see a couple of things that people don't talk about anywhere in YouTube, which is going to be cool to learn. Again, this is a paid advanced training, but I'm giving it to you here on YouTube partially for free. Not the whole thing, but a good chunk of it. And I'd love to hear your thoughts in the comment section below. So without further ado, let's dive right into the quirky nuances of a strategy and how to understand it better and make, of course, more money with it.
If you have any questions about a particular slide, maybe not a bad idea to throw them in the chat, and then I'll try and answer them, and then we could always talk about it at the end as well. So, because I'm going to show different examples, so maybe it'd be good to do that. But let's buckle our seatbelts and let's see where we go with this. All right, good. Maybe a little tough for some, so just absorb as much as you can. And again, those on the recording, I'm glad you're here, and you could, by all means, everyone here, watch the recording again. So what are we talking about? These quirky nuances. And I love that catchphrase brought on by one of my prior mentors. So, I get a lot of questions where people say, okay, on this strategy, so Mike, what you're saying is, I saw in your video, you enter at the 30 moving average, right? Yes, kind of. I mean, yes, that's the default answer, but is there more? All right. If it was that simple, I think we'd all be, gazillionaires. Market context is, thanks Dave, market context is one of the most underutilized factors when we try to develop traders. And quite honestly, I think we need to do more talking about market context, which is exactly why we're starting a whole series on this sort of subservient topic. Okay, so today we're going to discuss these little anomalies, little nuances that can take your trading and obviously hopefully profit factor to a higher level. Markets act very weird in a sense because there's humans behind that. It's not just candlestick charts, right, and bars. That's why I don't use them. There's humans behind that. There's human behavior, right? Human emotion. We'll take a look and see if we can extract that from what we're seeing and to give you a better edge. Okay, I use these all the time. It's a part of my narrative, which we'll talk about. Let's go to the next slide, Alex. I'm putting Alex to work today. He's got a lot of slides. Okay, so let's define this nuance, and I'll do it the best I possibly can. A nuance is this is a Google definition, having characterized by a subtle but often appealing complex qualities, aspects, or distinction. Now, why would I waste my time throwing a Google definition? A couple key words here. They're subtle, right? They're not blaring like, red light, green light. They have an appealing, complex quality, an aspect to them, and very distinct. Okay. Now, I promised myself I'm going to try not to use this phrase too many times in the presentation, but I'm going to use it at least once now. My mentor always just tell me, when these happen, the hair on the back of your neck should be standing up. Right? That was his little catchphrase. So I promise I won't use it too often. Okay. So why are these nuances so valuable? Right? They act as an additional filter, in addition to the ones you already have in your trading plan, that can give you an additional edge. That's cool. That's powerful. It can also improve the quality of the overall trades used. So if you have a filter, maybe a little less trades, but the quality of those trades, at least on paper, should improve. Right? It allows math to override opinion. I love this. You know me, I'm a big math guy. Remember the two turtles crossing the street? The one on the right wins 70% of the time. I'm taking that turtle. I don't get into opinion and stuff like that. Definitely not news. Trackable in journal. Very, very appealing. Makes your journal a little more cumbersome, but you can track these little nuances and see which ones are working best and also which ones you're able to identify that work best. So what are some of the drawbacks to these nuances? And we'll get into a lot of examples. It makes the identification process more challenging. If your strategy says I enter at 30 moving average, pretty simple. All right. But if you have thrown some of these nuances in there, I kind of have to like check a few more things out, check a few more filters. So it can make it a little more challenging. Profitable, but challenging. Not fun for lazy people. All right. I threw that in there because I know we all want like a quick way and like, if then. Sometimes, it's not the best for people who just want like something very black and white. Can clutter up the charts for some. Now, a lot of these quirky nuances are visual that you see. But if you want to make some notations, maybe it's alerts, certain alert ranges, when price hits a certain thing, sometimes it can clutter up a chart with a couple of those, a little extra lines. And I'm not a big fan of that personally. So it's not the best for those seeking the perfect trade. All right. Everybody wants that. If it hits this, I enter. There's a little subjectivity to them if you need to, if you want to. Cumbersome to code for algos. Again, anytime you throw a couple extra variables in, it makes it a little tougher to code. All right. Especially when there's a little bit of a nuance. How do you code nuance? Right. And we'll get to examples. This is the big one though. This is a kind of a potential drawback. For those who like to trade if then, if this happens, do this. Well, when we add nuances, they sort of become, the formula now becomes if, then. And that can be a little bit cumbersome and kind of a little bit overwhelming. It certainly filters out a lot of trades, right? But when they happen, it's mouse time, like I'm clicking the button, all right? So I hope I didn't confuse a lot of them, everyone. But let's get into some examples because that's probably the best way to show you some of these quirky nuances. All right? Good. Nobody's left. Success so far in 5 minutes in. All right. Quirky nuance number 1. All right. Let's buckle your seatbelts. I'm making my hands nice and warm, rubbing my hands. Quirky nuance number 1. What should happen doesn't. If you anticipate, for example, a continuation of a trend. Why isn't it continuing? All right. Price may be still moving. It's a trend. It hasn't reversed. But just the fact that it's not continuing, I got to say it one more time. The hair on the back of your neck should be standing up. All right. If you're anticipating a reversal, most reversals kind of stop, churn, and then they reverse. Right. With the exception of like V pivots during news events and stuff like that. So if I'm short, for example, and, think of the mindset when you're short, all right? Should be going down, continuing the whole bit. Why is it just sitting there developing a bull flag? Right? You start shaking your head. This is a quirky nuance that gives you a little head start to think, does it mean I exit? Here's an example. When screens go green, right? Now, let's just say the market is down, right? Pre-market, and again, if you're trading FX, it could be pre-London opening. The Asia session to me always acts like a pre-market, so to speak, before like the real action happens. Especially with Western pairs. If a down market is going to stay down, it probably should be trading higher than the quote opening price or the opening range, something like that. So let's use a quick visual example. Right, pre-market, for lack of a better word. If you look on the left there, it'll just trading down. That line is the opening price. Okay. Market opens up at that price, immediately pulls back into its comfort zone, and then goes higher than its opening price. I'm not going to mention the phrase about the hair on the neck. It should signal something like, that's odd. That's a nuance. That's a quirky nuance. Why is it doing that? Maybe it's just a tease. So those are little things to say, Now, if you're in a short, you're thinking, uh-oh, right? But if you're kind of looking at the markets and saying, hey, it's been down all night, overnight, and this and that, now all of a sudden it opens, pulls back, and now breaks the opening price. It'd make you like sort of bite your little lower lip a little bit, even if you're not in the trade. Now what happens? Price stays above that. Okay, that looks interesting. And then falls back below where that arrow is, below opening price, pulls back, comes back, tags the opening price, and then starts continuing lower. Really, really quirky nuance. What should happen doesn't. Should never have broke that opening price. And then Now it's above that opening price. Now it goes back below it again and holds there. Where are the buyers? We're going to get some really cool examples too. That I actually changed my slides to use for the most recent FX pairs and coming up because they were so fresh that I say, oh my God, this is like perfect for our presentation. So again, a quirky nuance. When screens go green or red, when they change, quirky nuance. Right? Let's go to the next slide. I'm going to give you some actual examples how you can use those in real trades and stuff like that. All right. What should happen doesn't. Trading failure. It's kind of like a second example of WSHD. Okay. And this actually I changed the other day. Let's look at the chart on the left. It doesn't matter. I've used Hekinashi. It's irrelevant. Just look at the concept here. Right. The prior's day low is where I had that line on the bottom. All right. Where that little question mark is. All right. That's the prior day's low. The market opens, and that's a little vertical little line you could barely see there, but it opens, goes below yesterday's low, and immediately snaps back. That's odd. All right. If this is a really big down move, it should just blow through that. And actually panic. People should be panicking, taking stops the whole bit, because a lot of people have their stops there, right, who are long. Immediately snaps back, hangs out, right, a couple bars later, pulls back below, snaps back again. I know I can't be using the hair reference, the hair on the neck thing. I won't do it. That's a quirky reference, quirky nuance that you all need to think about, right? Some who like it visually, I like to consider them M and W reversal pattern. See a sort of like a little W forming, right? Kind of comes down, pulls back, pulls down, up, right? Some of those who visually like to see those, like your eyes should light up. Thank you, Pierre. Your eyes should light up, right? Your hair should be on fire, something. Good. Really interesting, quirky nuance. If you look at it on the right side, this is sort of a very short-term chart, which doesn't look like much. It looks like just prices continuing down, right? It just looks like a downtrend. But the quirky nuance, which is a bigger picture, says something's wrong here, right? And where does it take it, right? To, some type of median or, moving out. It's a classic target where you enter target on the quirky nuance and take it to like a first area where it may be a little problem. My point, that shouldn't happen. Okay, quirky nuance. Good. I see I'm getting positive feedback in the chat. Let's go to the next one, Alex. Now let's talk about a little bit about divergence, probably worthy of a actual separate mastermind call. Again, when something should happen, doesn't, often there's divergence. And a lot of times we think about divergence, and we have a separate class on this, but about moving averages or like oscillators, RSIs, the price making new lows, but RSIs are not. Those are, if they work, great. And quite honestly, they kind of fell off my focus for some years, but they certainly have some validity, at least something to consider in your arsenal. But let's look at a couple other nuance tools. And again, it's a little more advanced. This is what the pro traders look at too. Oil prices versus CAD, right? CAD is very heavy affected with oil. They should be moving in tandem. But when there's divergence, could be something interesting. All right. For example, a USD CAD rising when CL is falling. So when I'm placing a USD CAD trade, I'm kind of going to glance a little bit at crude oil. Okay. You don't have to trade it or anything like that, but have it on your screen somewhere, or maybe in the, not on your screen, but in your sort of radar where you could just click it and see, hey, is CL in conjunction with this? All right. Gold versus the Aussie. Another really pair. Aussie is very sensitive to price movements in gold. Is there a divergence? Maybe the divergence says, I'm not going to take it. I want to make sure it's correlated. That's fine too. Okay. Again, these nuances should act as filters. All right. Give you a little extra power, bang for your buck. This is one that I know a lot of people don't use, the VIX. All right. The volatility index. For those trading S&P, especially on the future side, you should always have the VIX handy a little bit. If the S&P is flat, or just not doing much, but the VIX is rising, that's a tell. That's a quirky nuance. It's telling me, at minimum, I think I'm going to stay away from longs here, even if a long setup sets up. All right. Again, little quirky nuances, not in divergence, not necessarily divergence in an oscillator that we have in our chart, but just little things I'm going to take a quick look at and kind of be aware of during the trading day to see, is there certain things? Maybe I adjust my size because of it. I still want to take it, but I'm going to adjust my size. There's a lot of little things. Quirky nuances play a big role.
Hope you got some good value out of this. This is a good training. Even myself watching this now, I kind of get something out of it and I can apply it now to my own trading. But I'd love to hear what you think and what you got away from this video. If you have any questions, comments, comment below. I would appreciate that a lot. It would mean a lot to me to read your comments and see what you think of this training. If you want to get my free checklist where I detail my strategy using price action on a whole checklist that you can print out and use yourself to trade, I'll leave a link below for it. This is a checklist that can be profitable. It's totally free. I give it to you because I want you to apply it and use it to the best you can and maybe take ideas from it also. So link below for this. The first link will be to download that free checklist and get started with learning how I trade and some rules you can apply to your own strategy if you want. Make sure to subscribe if you haven't done yet. I publish videos like this 3 times a week. And I'll catch you back here in the next video pretty soon. Ciao.